In a shock move on Wednesday, all raw materials and lithium concentrates with immediate effect. They aren't waiting for 2027 anymore. They want refineries to build on African soil today. Globally, NVIDIA just proved that the AI bubble critics just proved all the AI bubble critics wrong, right? The proof was just noise, right? And they reported recurring revenue. I think that was really amazing and expected, actually. Meanwhile, the biggest media deal in the year is done, right? Paramount has won the battle for Warner Brothers, and Netflix is chilling on the sidelines right now. So the question is, should you be selling, holding, or buying Netflix? Let's talk about it, right? So my name is Ola. I'm a CFA charter holder with almost 20 years experience in finance. So welcome to the channel where serious Africans come to learn about money. And please say hi. Like I can see James Robson, James Bobs. I can see that. Sorry, I'm looking at early. Right. So let's start with it. The first news from today is from the global scene. Right. NVIDIA, we're talking about NVIDIA. What means release that would NVIDIA still do well? Is there an AI bubble? Is there really money to be made from the AI scene? Right. But they just financials to tell everyone to just and follow me. So NVIDIA really, for me, I think is a company that sells shovels in a golden rush, in a gold rush, right? And in this time, the gold rush is like actual digging, it's actually digital. So NVIDIA is one of those companies that I think is actually well positioned. Now let's break down their financials. Where did money really come from? So it's not just about, they recorded over 200 billion in revenue. So where did money come from? The first thing was data center, right? And so I would say that that's their crown jewel. That's where the money really is coming from right now. And so where they are, what is that really? They're powering AI, training, language training, large models, cloud computing, all those things that support the chat GPTs of this world. That's where, and I think the thing that I really want to highlight there is that, yes, they are powering them, but they are not, they're actually selling. So when you see things like Microsoft is borrowing for 100 years to invest in AI, using it to pay for the tools that companies like inviting or the services companies like NVIDIA are providing. So it's almost like they are positioned for the boom that is happening right now. The second place that revenue came from was from gaming. Now, before this whole AI boom, like 2-3 years ago, I was invested in NVIDIA, and it was because of gaming. So all their graphic cards, all those things that they used to support gaming, is still selling. As much as there's AI, there's also gaming that is still a massive world of its own. So data centers provided the first revenue. The second thing was gaming, and the last thing was professional visualization. So all those 3D design, all those kind of things. What am I saying here? And I think I talked about it last week before the earnings report actually came out. Don't look at NVIDIA and just think AI, and every time any negative news comes out of AI, you start panicking. Look at me as a whole and say what offer and where is the revenue coming from. Let's actually break it down. So yes, well, for now, but they are actually quite balanced. They are not one. So even chips, autonomous driving, all those things, they are there. So if do you think those things are still in the future, right? Then don't look at the whole AI hype and think NVIDIA is an AI stock, therefore I should be careful. No, that's not how it is. It has become AI infrastructure, and we know that AI is here to stay, first of all. Right. So even if AI spending slows, right, I think that the people spending is NVIDIA. So let's be on the lookout. The next news is about Netflix / Warner Brothers / Paramount. So at the time when we were setting up this news, it was like, oh, Paramount entered the so it's putting doubt to if Netflix can buy Warner Brothers, and we had talked about it earlier. Netflix for me, I mean, let me not jump the gun, right? Let's jump the gun. But basically, Paramount has entered the conversation and Netflix has official discovery. Now, this deal with Paramount is valued at about $110 billion. The merger is valued at about $110 billion. That's a lot of money, right? Now, who is Paramount Skydance? Because I was like, who are these? Because I know Paramount. But actually, Paramount Skydance is a company that owns some of the popular brands that you know. From like Paramount Studios, Paramount Pictures that you know, to Nickelodeon, MTV, BET, Showtime, and then they even own rights to things like NFL, Champions League, right? And the one that is like the most important, so you know how they can be doing $10 billion type deals, is that Larry Ellison, one of the what's it called, the co of Oracle, like they were in the news late last year. He's one of the backers, one of the major financiers of this company. So what did Netflix want to do? Netflix had told Warner Brothers that, see, all your traditional media, spin it off. The thing that I want is your hi Disco, I see you. The thing that I want is your streaming, all those kind of things. So they were saying that if I'm going to think from you and bail you out because you have debt and blah, 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 right? You must spin off the things that I don't think will thrive in the future. But Paramount came and said, I'm buying everything, bring it on. I can do this. So Netflix really, and they don't have that kind of liquidity, right? Their budget for content in 2026 about 2 billion, right? Their chest is not that heavy or big, right? And so one of the things that we wanted to highlight here, so where does this leave Netflix, right? Netflix, I would say, has been trying a lot of things because the streaming industry is highly competitive, and Netflix, I must give it to them, they have really successfully made a name in an industry, right? They are actually with giants. So in trying to buy Warner Brothers, it was going to bring them into the big league, right? The bigger boy, but they knew that they couldn't carry the heavy weight of the traditional platforms who were heavy in debt, that are heavy in debt, they are not people debt. So they wanted to spin that off before coming on board, but somebody has come, a bigger boy, to take them over. So in terms of where does this put Netflix? Netflix is in a highly environment. Netflix is trying to put ads into their platform, right? They've tried all sorts of things. They want to start push ads. They are trying to put it on the platform. Different things that we've talked about, right? And oh, I see someone else. Oluyemi Adeosun, thank you. And basically, what are they saying? They can't afford that kind of money. However, should you be selling? Should you be holding? I think Netflix is going through a trying period. I see Netflix being bought over at some point. It's just a thought. Like, why? Because streaming is highly competitive, content is expensive, and just being able to keep buying content to keep up with the rat race when you don't have the kind of balance sheet that an Amazon or an Apple has, it's a lot in the long term. And you can see how they are trying new things. It's a type thing. If you're already Netflix, I would say you should hold. But it's careful to buy. Personally, let me say I would say you should hold. I would say I would hold. Because if you want proper advice, get a professional to sit down with you. But I would say you should hold, but I would necessarily not buy into Netflix at this time. I'd rather see them find a strategy that works and is scalable and is competitive over time than just jump in right now. Right? But interested, I thought that all you do was YouTube. And I was like, no. I run a media-led financial education company. So I just decided that I'll be sharing something about our work every week, just so that people understand what we do and see that, okay, the questions that they have in their hearts, there's someone that can answer them for it. Right? So I want to share a video. I'm looking at my screen. No, don't think I'm looking away. So I want to share a video, a short clip, 1 minute. Confirm that you can hear. Okay, explain now. Time, I realized that there was really a gap when it came to financial education, when it came to managing money, when it came to being able to tell white from black about investing, and when it even came to identifying opportunities that are around you, meaning there's actually an opportunity, it is good, know that it is one. We have a media expression, we have shows that have gone on radio in Lagos, Abuja, Port Harcourt on financial education. We also train companies from Shell, we've spoken at Africa, we did stuff at MTN last week. We've had almost over 200 one-on-one sessions with people about to retire.
What do I like about the club is a collection of like minds. Everybody is interested in growth, and I mean it's really interesting to see people who are willing or trying to at least to better their destiny so to speak.
So no, I don't. Apart from the club and YouTube, I actually have a full time. I run a full time company, and we deploy financial education programs to companies. And 3 times a year, we actually have open programs where you can sign up individually to put your finances in order. Our upgraded website is about to be launched, but to get a sneak peek, we're at www.themoneywith.africa. So check us out. Yes, and let's work together. Now, on the African news, Zimbabwe has taken an immediate decision to shut export of its raw materials. Now, I saw that news and I'm like, you guys like take a chill pill, right? But if you have my newsletter, you see that the first line that I said was, mining executives just had to choke on their morning coffee sometime last week or this week that just passed, right? Now, the backstory is that Zimbabwe sits on serious mineral wealth, right? Especially lithium that powers electric vehicles and is a major tool or major ingredient in this whole green transition globally, right? So before now, what they used to do was just dig up the materials and export it. And then when we need it, we now buy it back premium, right? But all of a sudden last week, the government announced that one that is in transit, meaning you have dug it up, is still on the road to the port. Shut it down. Nothing is going out of this country anymore. I thought that was quite harsh. And I mean, I'd like to hear from other people. What do you think about that? But yes, there's a logic. They had already given heads up that by 2027 they will shut it down. But this coming close is like a real shock. But what are they trying to say? They are saying that so that we must produce this thing locally. We must refine this thing locally. That we can't be giving the raw material and then buying it back expensive. That no, it's not working and it's not going to keep happening. Let's shut it down. Now, it's a good move, but I'm not sure about the implementation, right? Because there are different sides to it. Number one is there are people that have signed contracts that have agreed on sales that this government hard stop will be a major shock, can bring up legal issues, blah, blah, blah. That can also bring about supply chain if you are expecting is whatever to deliver on your electric vehicle. You get the point. That's that. But the second thing also is that as much as I mean they have the numbers, right? But as much as this seems like, oh, you're trying to build a moat around yourself and stuff, the FX, oh yes, they banned it because movement was too much. They couldn't control it. So I don't want to see anybody moving. Like we can see how the big daddy can make that decision. But I mean, they shut it down, but the effects that was coming could have helped the economy. I dare say that whole shutdown could actually impact reserves. And then finally, if people feel like a country can randomly just disregard contracts entirely and shut things down, they might be spooked to come back when you're even ready to do things. But I would also say that this is Zimbabwe. We have seen Zimbabwe and how they have made major changes, especially with their currency and stuff, and it's working. So I really, really give it to them. I would say that they need to be careful because refining in itself is a capital intensive long-term project. It's not something that you shut down today, the refiners will come up tomorrow. It doesn't really work that way. So that gap, they need to figure out how they're going to manage it because there definitely will be a gap. But is it a step in the right direction? Yes. The implementation might be a little shaky, but they might actually have what's it called? Reasons, more intel to why decision had to be made in this manner. But from an African perspective, I love it because Africa is taking over, or not even taking over, just taking their place. You always had the assets, you had the people. You would export the asset, export the people, and import back expensive, right? And so they are saying, yeah, my people are not going anymore because Jackpa is slowing down globally. And then I have the assets. Why don't I just wake up and find local financing, like Ghana also that is saying they want to find local financing for their cocoa so they don't have to export the raw material. So big ups, I think Africa is the future. So if you're an African living outside of the continent, you need to find a way to plug in somehow or the other, right? Yes, there are risks, but high risk is supposed to somewhat somehow result in high return, all things being equal, as long as you don't put all your eggs in one basket. Of course, I told you that we run a financial education company. So if you want to know how or why, chat us up, send a DM, send something. We're on all the social media platforms. Yeah. And also drop your questions or thoughts in the chat. And then the next news I would say would be from Nigeria. Hey, Nigeria's firstborn, the only Nigerian that exists. Mr. Dangote made an announcement this week that they are going to what's it called? List the refinery and petrochemical company, right? So what I'm going to do here is to analyze it. What do we know? What don't we know? How should you prepare for it, right? So like I said in my newsletter also, like this is a red meets portfolio growth. Normally our national pride is in football. So but this is one time where we are proud to say, Dangote is a Nigerian. And then it's meeting portfolio growth. Yeah. So what do we know? The first thing that we know is that there's going to be a transition from a private giant to a public company. That means it's going to be listed on. The first thing is that, excuse me, the company is currently registered as Dangote Petroleum Refined Chemicals FZE. FZE means free zone enterprise. So for it to convert and be listed, so for it to be listed on the stock exchange, it was converted to a PLC. Now, if you remember the announcement that he made saying, oh, you will be able to pay, receive your dividend in USD, at the back of the name of the company, because there's a free zone arbitrage, right? Even as long as the physical location of the refinery is still in the free trade zone, which it is, right? The Lekki Free Trade Zone. It's allowed to retain its tax exemptions, so its profits will be profits and bypass certain CBN FX restrictions. That is why he can tell you that even though he'll be living in USD. We know, I hope you are learning something because some of this news is very important for us to like understand where it's coming from. Yeah. The initial offering targets 10% equity stake, right? The good thing to note is that it's not just the refinery, but it also includes the petrochemical complex, right? So it's actually a massive company to be a part of, and have that we are in, right, is a good to have in your portfolio, right? So beyond holding cash, prepare. Of course, the first thing is that you need to gather your cash, right? Right? You can't invest air, you can't invest hope. You can't say I'm coming, you're coming, it has moved. So he said you can receive your return in USD. So maybe open a DOM account. That's something you can prepare for. Another thing also is that stock, right? The best thing is for you to open a stockbroking account so that when you are getting your credit of your stock, you get it seamlessly along with everyone. You won't start looking for what is not lost. That's another thing that you can do. The final thing also is to actually decide on how much you want to put into it. The fact is that it's a good company. It's well run. It's well positioned, right? Need in the long run. It's a global. It has taken its place in the global space also. So yes, but don't put all your eggs in one basket, right? Don't. I mean, just so you that you understand, right? If oil prices go to $10, the price of that stock will come down. So whilst it is still a good company, there will still be yo-yos. So even if you don't have all the money, don't go and carry all your money, liquidity money, food money, everything and put in there because it's a stock, it's a long-term game, right? Last thing to know, because I mean, my target mostly is retail investors. The last thing to note is that it takes a long time to get credited. Just know that. It's not that the way you bought the stock, it's settled in 1 day or 2 days. No, that's not how it works. That's before it comes back to you in your stockbroking account, right? So just know that. However, as a retail investor, so let's say they say have 100 cars sharing, random example, and then 40 out of it, there's retail investors and institutional investors. Retail investors, their total demand is 45, right? Give all the retail investors. Then out of 45, we have like 55 left. Out of 100, we have 55 left. They will now, even if the institutional investors' total demand is 200, they will give it to the retail guys first. So then advantage for you to actually bid on your own for things like this, to buy more of it. But as a retail investor, know that there's that advantage that you genuinely have, right? But understand that it's a stock. The rules don't change because it's done, right? There is a limit to what he can do to control the prices when there are major external factors that are happening, right? Now, the final news, let me see if there are any comments that I've missed. Hi, Tolu. Hi, James Bob. Thank you so much. And then the final news is that central bank, what's it called? Reduced interest rates. Now, a lot of people have seen that there's been so much around it. Let me see if I can pop that up. Oh, it's making me disappear. But yes, that's the central bank. I popped it up for a split second, but it's not making me look good. But basically, the central bank has cut interest rates. What does that mean for you as an individual? I will first of all talk about generally what it should mean for the economy. What are they saying? They are saying that things have improved. Rates that has been choking the market, making it expensive for businesses to borrow and grow. Let's move away from price depreciated significantly and has stabilized. Let's try and see how we can support the economy by making money cheaper, right? That's generally what they are trying to do here. Now, you as an individual, what does this mean? How does it affect the prices or the value of your income? If, for example, it's cheaper to borrow, all things being equal, and there's a good, I would explain what that is in a few seconds, and there's a good transfer of that rate. So let me keep it simple. So central bank drop rates and all the banks follow to drop their rates, right? And so you see it in your borrowing rates, and then you were in the real estate market. What does that mean? It'll be cheaper to borrow, therefore people are more likely to demand for houses, right? That's one. If you were someone that is take margin facilities to buy stocks, what are margin facilities? I go to my stockbroker, I say, give me 100 million. I want to buy Dangote stocks, right? So they'll give you that, but it will be at a rate. It's just a loan for them. You buy your stock, it's your own, you sell off. If it's cheaper, you are more likely to borrow more because your costs will be lower, right? So what would that do? It will fuel demand to stocks, right? And then if you are a bond investor, right, what they are saying is that if I was paying you 20%, I'm now going to be paying you, which is what happened last week. So the bond auction that came out, the 10-year auction, even in the market was at 16%. When the auction came out at 15.5, right? So rates are coming down. But if rates are coming down, it means that there's a smaller discount. and that prices will go up. What do I mean? Imagine if something is 100 naira and there's a discount of 10 naira. So the price will be 90, right? But the discount has now reduced to 5 naira. What would the price be? 95. So if you already hold the bond and you bought it at 90, it means that you can sell it off at 95 in the secondary markets. That's a profit for you. I've explained finance in extremely simple English. That's why we see that when rates come down, prices go up, right? So long and short of this whole thing, whilst we can see that we saw the announcement, there's so much talk, and it just seems very. I take it from it impacts your pocket. It impacts retail investors. It impacts, and as a whole, it impacts the economy. Now, does this affect the inflation coming down, like the cost of goods? Maybe not. That's a different ball game in itself. However, lower interest rates general economy. So let's see what this will do in terms of making money move around more and more. I trust this was useful. Don't forget that you can't outsource your health and your finances. You always have to engage. See you next week.